Tokenization, the 100 trillion shift. The world is standing on the edge of a financial transformation bigger than anything we've seen since the dawn of the internet. At the center of this shift is a single concept: tokenization. The idea that every asset, from real estate and stocks to commodities, bonds, and even carbon credits, can be represented as a digital token on a blockchain. For years, tokenization was a buzzword tossed around by futurists, but today it's becoming a reality. Major banks, governments, and financial institutions are no longer asking if tokenization will happen, but when and on which networks. BlackRock, the world's largest asset manager, has called tokenization the next generation for markets. Citi projects it as a $100 trillion opportunity. The biggest players in finance are preparing for a world where everything of value is digitized, fractionalized, and traded seamlessly across borders. But here's the challenge. Tokenization requires more than just technology. It needs trust, interoperability, and liquidity. That's where the XRP Ledger enters the story. While thousands of blockchains exist, few have the credibility, regulatory alignment, and efficiency required to host tokenized real-world assets at scale. Ripple has spent a decade positioning XRP as the neutral bridge for money, liquidity, and now, tokenization. Why XRP? The reasons are clear. The XRP Ledger is fast, cheap, scalable, and eco-friendly, capable of settling transactions in seconds at fractions of a penny. It's compliant-friendly, already tested with banks, and designed for cross-border movement. In a world where tokenized assets must move not just within a country but across the globe, XRP is uniquely suited to serve as the connective tissue. Imagine owning a fraction of a Manhattan skyscraper, a slice of an oil pipeline, or a basket of tokenized government bonds, all tradable instantly, with settlement in seconds, and available to investors worldwide. That's the promise of tokenization, and for the first time, the rails to make it happen are being built. Ripple's strategy goes beyond hype. It is actively involved in tokenization pilots with institutions across real estate, carbon markets, and securities. Its push into green finance through tokenized carbon credits shows how the XRPL can host assets with global impact. Its partnerships with regulators and enterprises demonstrate that it is not just building technology, but building trust. But tokenization isn't without its challenges. Regulation, custody, interoperability, and adoption remain major hurdles. If every institution builds its own siloed system, tokenization risks becoming fragmented, a collection of walled gardens. XRP's role as a neutral settlement layer could be the solution. Connecting tokenized assets just as it connects currencies today, this documentary explores the future of tokenization through the lens of XRP. We'll dive into real-world use cases across real estate, commodities, stocks, bonds, and ESG markets. We'll examine Ripple's pilots, the role of CBDCs and stablecoins, and the challenges that must be overcome. And finally, we'll look ahead to a $100 trillion future, one where XRP is not just a cryptocurrency, but the backbone of tokenized value worldwide. This is the story of Tokenization Deep Dives Real-World Assets on the XRP Ledger. Part 1. Real Estate and Commodities on the XRPL. Real estate has always been one of the most important and stable asset classes in the world. From residential homes to office towers, property represents trillions of dollars in locked value. Yet despite its size, real estate remains one of the most illiquid markets on the planet. Transactions take months, involve mountains of paperwork, and are limited to wealthy buyers who can afford entire properties. Tokenization changes that. By digitizing property ownership into tokens on a blockchain, real estate can be fractionalized. Instead of needing millions to buy a skyscraper, an investor could purchase a token representing 0.1% of that building. Ownership is tracked transparently on-chain. Transfers are instant and liquidity is unlocked. A property that once had a handful of owners could now have thousands of investors across the globe. The XRP Ledger is well suited for this, with its ability to process thousands of transactions per second at negligible cost. The XRPL can support real estate tokenization markets without the bottlenecks of slower blockchains. More importantly, Ripple has already been exploring real estate tokenization pilots, proving that the infrastructure isn't just theoretical. By anchoring property titles to the blockchain and ensuring compliance with local regulations, the XRPL can serve as the backbone of tokenized property markets. Commodities represent another massive opportunity. Gold, silver, oil, and agricultural products form the foundation of global trade, yet these assets also suffer from inefficiencies. Paper contracts dominate trading, settlement can take days, and access is restricted to institutional players. Tokenization brings transparency, liquidity, and accessibility. A tokenized gold bar on the XRPL can be divided into fractions, traded instantly, and settled across borders without reliance on intermediaries. We're already seeing glimpses of this future. Several fintechs are experimenting with tokenized gold, energy credits, and agricultural products. By moving these tokens onto efficient ledgers like XRPL, commodities trading could open up to a broader investor base while reducing costs for institutions. Imagine paying for an oil shipment instantly with tokenized contracts, or allowing retail investors to hedge against inflation by holding fractionalized, tokenized gold on their phones. The implications go beyond investment. Tokenization of real estate and commodities could revolutionize lending, collateralization, and global finance. A homeowner could borrow against a fraction of their tokenized property, instantly securing liquidity. Farmers could tokenize future harvests, giving them access to capital today. Entire supply chains could run on tokenized commodity contracts, reducing fraud and increasing efficiency. XRP's role is central in this. It doesn't just provide the ledger. It provides the bridge liquidity that allows tokenized assets to flow across currencies and borders. If a U.S. investor wants to purchase a fraction of a property in Dubai or a gold contract in Switzerland, XRP enables seamless settlement without relying on fragmented banking rails. In this way, the XRPL becomes more than a registry of tokenized assets. It becomes the global exchange layer for them. Of course, challenges remain. Real estate tokenization must overcome regulatory hurdles, property rights enforcement, and custodial questions. Commodities face issues of authenticity, storage, and legal recognition. Yet the momentum is undeniable. Institutions from BlackRock to JP Morgan are exploring tokenization. Ripple's positioning of XRPL as an efficient, regulatory-friendly ledger places it squarely in the conversation. The next chapter explores how stocks and bonds, the core of traditional finance, will be transformed by tokenization on the XRP Ledger, and why this shift could change the way everyone invests. Part 2. Stocks and bonds on the XRPL. If real estate and commodities represent the foundation of global wealth, then stocks and bonds represent the machinery of global finance. Together, equities and debt instruments form multi-trillion-dollar markets that underpin investments, retirement funds, corporate growth, and government financing. Yet these markets, despite their sophistication, are riddled with inefficiencies. Settlement delays, middlemen, and restricted access plague investors and institutions alike. Tokenization offers a chance to rebuild them from the ground up. Take stocks, for example. Today, when you buy a share of Apple or Tesla, that trade does not settle instantly. Instead, it goes through a complex chain of brokers, clearinghouses, and custodians, with final settlement taking 2 days or more. This delay creates counterparty risk, ties up liquidity, and adds unnecessary cost. Tokenization changes that dynamic entirely. By issuing stocks as digital tokens on a blockchain like the XRPL, ownership can be transferred and settled in seconds, not days. This has enormous implications. Tokenized equities could eliminate much of the friction in capital markets. Fractional ownership becomes seamless, allowing investors to buy not just one share of Tesla but 0.001 shares if they choose. Access expands globally. Someone in Nigeria or Argentina could directly own a slice of US stocks without needing intermediaries. Liquidity deepens as fractional trading brings more participants into the market. The XRPL provides the technical foundation for this vision. With its efficiency, scalability, and compliance-friendly design, it can serve as the platform for issuing, trading, and settling tokenized stocks. Ripple's institutional partnerships mean it already has the trust and infrastructure to engage with regulators and financial institutions exploring tokenization pilots. While Ethereum has dominated early tokenization experiments, its high costs and slower speeds are a barrier. The XRPL offers a leaner, more scalable alternative for securities markets. The same transformation applies to bonds. Governments and corporations issue trillions of dollars of debt each year, yet bond markets are notoriously illiquid. Settlement can take days and retail access is limited. By tokenizing bonds on the XRPL, issuers can create instruments that are divisible, tradable globally, and instantly settled. An investor could buy a fraction of a U.S. Treasury bond or a corporate bond from a foreign market, unlocking opportunities that were once limited to large institutions. Tokenized bonds also have the potential to revolutionize financing. Municipalities could tokenize infrastructure bonds, selling them directly to citizens worldwide who want to invest in sustainable projects. Corporations could issue tokenized debt tied to real-time performance metrics, enabling dynamic repayment models. The transparency of the blockchain would enhance trust, while instant settlement would reduce systemic risk. XRP's unique role is to act as the settlement bridge. Imagine a Japanese investor purchasing tokenized German bonds. The investor holds yen, the bonds are denominated in euros, and the bond is tokenized on the XRPL. XRP enables seamless conversion and instant settlement across currencies and asset classes. It's not just about tokenization, it's about global liquidity. Of course, this transformation won't happen overnight. Securities markets are heavily regulated, and integrating blockchain into stock and bond issuance requires collaboration with regulators, custodians, and institutions. But the direction is clear. Tokenization is no longer hypothetical. It is being tested by some of the biggest players in finance. And the XRP Ledger is positioning itself as one of the most efficient and compliant platforms to host these new markets. The next chapter explores carbon credits and ESG markets, Ripple's biggest push into tokenization so far, and why these assets could define the XRPL's role in a sustainable global economy. Part 3. Carbon credits and ESG markets on the XRPL. Among all the potential use cases for tokenization, one of the most active real-world examples today is carbon credits and ESG assets. These markets are at the intersection of finance, technology, and sustainability, and Ripple has already made them a priority. Carbon credits are designed to incentivize companies to reduce emissions. One credit typically represents 1 metric ton of carbon dioxide removed or prevented from entering the atmosphere. In theory, companies can offset their emissions by purchasing credits from projects that reduce or capture carbon, like reforestation, renewable energy, or carbon capture technologies. But the current system is broken. Carbon markets are fragmented, opaque, and plagued by fraud. Credits are often double-counted, poorly verified, or traded through middlemen that add costs and reduce transparency. This lack of trust has undermined one of the most important tools in the fight against climate change. Tokenization on blockchain, particularly on efficient ledgers like XRPL, offers a solution. By issuing carbon credits as tokens, each credit can be uniquely identified, verified, and tracked from issuance to retirement. This ensures that no credit is double spent or misrepresented. Trading becomes more transparent, settlement is instant, and costs are reduced. Fractionalization also expands access. Individuals, not just corporations, can invest directly in carbon markets, creating a more inclusive system. Ripple has made this space central to its strategy. In 2021, Ripple announced investments in carbon removal companies and partnerships to build a blockchain-based carbon credit marketplace on the XRPL. The goal to make the XRPL the global standard for tokenized carbon. This aligns with Ripple's broader vision of positioning XRP as the green bridge currency. Fast, efficient, and eco-friendly compared to energy-intensive alternatives like Bitcoin. The impact of tokenized carbon markets goes beyond compliance. They could open up entirely new ESG investment opportunities. Imagine an investor purchasing a portfolio of tokenized credits tied to specific projects. Reforestation in Brazil, solar farms in Africa, or carbon capture in Iceland. Each tokenized credit represents not just an offset, but a transparent, auditable claim of real-world environmental impact. For companies, this transparency solves a major problem. Multinationals are under pressure to prove their ESG commitments. With tokenized credits, they can demonstrate compliance in real time, tracked on a public ledger. Regulators can audit instantly, and consumers can see the results. This reduces greenwashing and builds trust in corporate sustainability claims. XRP plays a critical role here. Beyond serving as the settlement layer for these markets, it symbolizes the green financial infrastructure Ripple is trying to build. While other blockchains struggle with energy use, the XRPL consumes negligible power, aligning perfectly with the goals of ESG markets. Its compliance-ready framework and partnerships with enterprises also make it an ideal platform for regulated carbon trading. Of course, challenges remain. Carbon credit verification standards are still evolving, and adoption depends on regulatory clarity, but the momentum is undeniable. As governments and corporations face increasing pressure to reduce emissions, demand for reliable, transparent carbon markets will grow. Ripple's early positioning gives XRP a chance to be the backbone of this transformation. The next chapter explores how tokenization interacts with CBDCs and stablecoins, and why the XRP Ledger could serve as the interoperability layer that ties together money, assets, and sustainability in one global network. Part 4: Tokenization plus CBDCs plus stablecoins. If tokenized real estate, commodities, and securities reshape individual markets, then the next frontier is how tokenization connects to money itself. Central bank digital currencies, CBDCs, and stablecoins are the glue between the traditional financial system and tokenized assets. And here, the XRP Ledger has a unique opportunity to serve as the interoperability layer that ties everything together. Today's financial system is siloed. Stocks exist on exchanges. Bonds are traded through custodians. Carbon credits sit in specialized registries, and currencies are controlled by central banks and intermediaries. Tokenization promises to unify these silos into one interoperable digital ecosystem, but only if there is a common settlement layer. This is where the XRPL, XRP, and Ripple's strategy stand apart. Let's start with CBDCs. Dozens of central banks worldwide, from China to the EU to the US, are exploring or piloting CBDCs. These digital currencies will likely be issued and controlled by governments, but they won't exist in isolation. Businesses, consumers, and investors will need to transact across borders and asset classes. How does a Nigerian naira interact with a US digital dollar? How does a digital euro connect with tokenized US treasuries? This is where interoperability matters. Ripple has already positioned itself as a leader in CBDC infrastructure, partnering with central banks to pilot blockchain-based issuance platforms. The XRPL's proven speed, efficiency, and compliance framework make it an ideal environment to host or bridge CBDCs, and XRP acts as the neutral asset in between, converting value seamlessly when one CBDC needs to interact with another. Now consider stablecoins. Today, Tether USDT and USD Coin USDC dominate digital payments and trading, yet both operate largely on Ethereum and other chains, with fragmentation and counterparty risk as ongoing challenges. Ripple's own stablecoin, RLUSD, signals a shift, a compliance-first enterprise-grade stablecoin issued on the XRPL and designed to complement XRP rather than compete with it. The combination of CBDCs, stablecoins, and tokenized assets creates a web of value that demands a bridge. Imagine this scenario. A European investor uses a digital euro CBDC to buy tokenized shares of an American company, which are denominated in USD. Settlement occurs in seconds, with XRP facilitating the conversion. The investor then sells those shares, moves into tokenized carbon credits for ESG exposure, and later redeems profits into a stablecoin wallet for daily spending. All of this could run through the XRP Ledger's rails. The XRPL is not just another blockchain hosting tokens. It is designed to be the connective tissue of the Internet of Value. Its decentralized exchange, DEX, interoperability features, and trust line model already allow assets to interact natively. Adding CBDCs and stablecoins to this mix only expands its utility. For investors, this evolution is transformative. No longer will access to tokenized stocks, bonds, or real estate require a brokerage account, wire transfers, or waiting days for settlement. Instead, with a CBDC wallet or a Ripple-issued stablecoin, anyone could move value instantly into tokenized investments worldwide. That means 24/7 capital markets accessible to anyone with an internet connection. A complete reimagining of financial inclusion. The road ahead requires regulatory clarity and global cooperation. CBDCs are highly political, stablecoins face competition, and tokenized assets must meet compliance standards. Yet Ripple is already engaging with regulators and central banks while building the infrastructure on the XRPL. If successful, XRP could emerge as the neutral liquidity layer that makes tokenization practical at scale. The final chapter of this series explores the $100 trillion future of tokenization and how XRP could sit at the center of the most profound financial transformation in history. Part 5. The $100 trillion future. When we talk about tokenization, the numbers are staggering. City projects' tokenized assets could represent 100 trillion or more within the next decade. BlackRock calls it the next generation of markets. Major banks, hedge funds, and asset managers are not just watching this trend, they are preparing for it. The world is shifting from paper contracts, fragmented systems, and delayed settlements to a unified digital always-on marketplace. In this new era, every form of value, real estate, stocks, bonds, commodities, carbon credits, even intellectual property, exists as a token on blockchain rails. Ownership is transparent, settlement is instant, and access is global. A farmer in Kenya could sell tokenized harvest futures directly to an investor in Japan. A pension fund in Canada could diversify into fractionalized infrastructure projects in India. A family in Brazil could own a share of a Manhattan skyscraper, not through complex intermediaries, but through a few taps on a smartphone. The opportunities extend beyond investing. Tokenization will unlock new models of finance, lending, and liquidity. Tokenized real estate can be used as collateral for instant loans. Tokenized bonds can be sold directly to citizens, democratizing access to debt markets. Tokenized carbon credits can fund environmental projects in real time. And the ability to fractionalize assets means opportunities once reserved for billionaires and institutions can finally reach the global middle class. But if this vision is to become reality, it requires something critical: interoperability and liquidity. Without a neutral bridge, tokenized markets will become fragmented silos, just as today's financial system is divided by borders and intermediaries. This is where XRP steps into the spotlight. The XRPL is not only capable of issuing tokenized assets, it is designed to connect them. XRP provides the liquidity that allows value to move seamlessly across currencies, assets, and jurisdictions. Imagine this: a government issues tokenized bonds on a CBDC platform. An investor in another country wants to purchase them using a stablecoin. The bonds are denominated in one currency, the stablecoin in another. XRP enables instant settlement, bridging the gap without friction. Scale that scenario across trillions of dollars of assets, and XRP becomes the invisible backbone of the tokenized economy. Ripple's strategy shows it understands this future. By positioning the XRPL as the home for tokenized carbon credits, by piloting real estate tokenization, and by launching its own enterprise stablecoin, RLUSD, Ripple is building not just a payments network, but a tokenization ecosystem. Each step reinforces XRP's role as the liquidity layer of the Internet of Value. Of course, challenges remain. Regulation, custody, and adoption will take time. But history shows that efficiency wins. Just as the Internet digitized information, tokenization will digitize value. And in that digital economy, assets will need rails. XRP is built to be those rails. The $100 trillion future is not science fiction. It is unfolding right now. The only question is which networks will power it. Bitcoin gave us digital gold. Ethereum gave us programmable money. But XRP may give us something bigger: the foundation for tokenized global finance. The next chapter, and our cinematic close, reflects on how XRP could evolve from a bridge currency to the backbone of a financial system where every asset, every market, and every transaction lives on-chain. The bridge to the tokenized future. We've traveled from real estate and commodities to stocks, bonds, carbon credits, CBDCs, and beyond, all pointing toward a single truth: the future of global finance is tokenized. But tokenization is more than a buzzword. It is the transformation of how humanity stores, transfers, and grows wealth. And at the center of this transformation sits XRP. Fast, efficient, neutral, and trusted by institutions, XRP isn't just another cryptocurrency. It's the settlement layer that could connect a $100 trillion tokenized economy. If Bitcoin was digital gold and Ethereum was programmable money, XRP may be the invisible engine, the bridge that powers the Internet of Value. This is the story few are telling, but it's one we'll continue to uncover here. Because the future of money isn't coming on, it's already being built. If you found this story valuable, make sure to subscribe to LTL Productions. Join us as we explore the untold narratives shaping the new financial system. The greatest transfer of wealth in history is happening, and you don't want to miss it.